Greetings, friends, and welcome to the Financial Week. As always, Jose Miguel Castillo and Ferdinand Ruano are here to share ideas, concepts, and news about the market and the economy in general. Jose, welcome.
Ferdinand, happy to be recording episodes again at important moments with lots of data, lots of movement, definitely. This episode, then, as we usually talk a little bit about economics, the market, what we are seeing that is happening. Certainly, the year 2026. Ferdinand started off slow. If we look at the year's performance, slow is amplified, it's slightly negative. There's been a pretty marked rotation, and some hot topics are happening that we're seeing in terms of what's going on. Market, Ferdinand, artificial intelligence valuations, a lot of concern about how spending is looking. That has created quite a bit of volatility. When companies report, when they report in the nautical index, they've announced a lot of investment. This is already starting to worry investors a bit,
as well as the impact on employment, and that it could also create a dislocation
and relocation. That's one of the hot topics. There's also talk about, let's call it a monopoly among the largest companies. Nvidia announces investment in OpenAI, and then OpenAI says it will reinvest that money in Nvidia's chips. So you have a small group among those who supply artificial intelligence.
If you've made it this far, it's because you like our content, and we are happy to welcome you on the different platforms.
Follow us. When you are on Spotify, simply hit the share button. Please like and subscribe to our channels, PNJ and Adropic, which are actually pretty strong competitors with each other in this market. So just like Microsoft, like Nvidia, like Google, they all interact with each other. And that too, to a certain extent, has created a certain degree of fluctuation, volatility. So the markets have rotated, they've moved a bit away from big tech.
How would you assess the first analysis we did in January regarding the situation we saw in the market compared to what you're noticing right now and what you're seeing?
Well, if the audience visits the previous episodes, in fact, and we talked a bit about the outlook, there was an episode where we discussed the analysis, for example, of Larry Williams in his forecast for the year, which was very important. We were talking precisely about this. I think it's being confirmed. What we talked about at the beginning of the year is starting to be confirmed. Rotation, volatility, strong trends are starting to emerge, which we briefly discussed this morning to share with you. If we look at economic data, GDP came out today. It was weak. It came in below expectations. 1.4% growth in the last quarter of the year. Around 2.2, 2.3. I think that was for the full year. In other words, this is below what it was in 24, Ferdinand, and below what it was in 23, which were years of higher growth in terms of GDP. Inflation, stubborn, PCE, it came out pretty sticky. It came in above expectations, or
inflation
is rising. This brings us to what came out in the Fed minutes. This week, during the week, we saw a rather divided Fed. Currently, and even there is talk among some of them about raising rates. In other words, you have a rather divided Fed with one side in favor of maintaining the current policy, and another side even saying that if inflation remains high or if high readings start coming out, then there is even talk of raising rates. That's one of the viewpoints we've been talking about
as well. I think today's data suggests that's not the case. They are not expecting rate cuts for the next 2 or 3 quarters. At least that's what can be seen in general terms regarding the economy, and that's the situation. So I think rates will likely remain where they are.
It's a full percentage point above on PCI at 3% year over year compared to the Fed's target, which is 2%. So yes, I agree, Farid. I mean, really,
if you really take a close look at the numbers, you will see that economic activity was significantly below expectations, and inflation was actually quite a bit above. In other words, today's numbers were not good.
They were not good. So you also have severe and significant adjustments in the employment data. In 2025, the number of newly created job opportunities was exceptionally low when compared to the figures from all previous years. That is exactly where
the situation with consumer confidence also comes from,
with the
low numbers. That's where it comes from, and you can see that consumers are a bit apprehensive. At least that's what I notice out on the street.
Another relevant piece of data regarding consumers is the level of debt, which is extremely high. Extremely high. People, as we say in our town, are up to their necks. So give me your opinion. How are you seeing it? Are you
really going to laugh at this? You should know that back in the days of PES, we actually specialized in handling this stress. He called me recently, and I share this as an anecdote to illustrate my point. One of the people who used to find me distressed properties without foreclosure showed up. He wrote to me and said, in fact, I have a Zoom call with him on Monday. He says, you know what, Ferdinand? Unbelievably insane. Petersburg and Tampa, foreclosures are skyrocketing. Homes worth $1 million, $1.5 million. People can't afford them and are just walking away from them. I laughed. I mean, it's not that I'm laughing at that, but it's just how life is. What you're mentioning shows that consumers are overstretched.
Yes. Consumers are... Credit levels are high. That's also going to make consumers hold back in many ways, right? Yes,
that is most definitely true.
So that's another headwind, another cross current that's coming up. I don't know if you remember the movie The Perfect Storm. Storms came together, right? Another one is the situation, the geopolitical tensions. We currently have a president who has openly stated that he wants the Nobel Peace Prize, but his actual actions are the entirely contradictory to that goal. Right now, the nation of Iran is completely encircled by military forces at this very moment. Iran is completely surrounded by a U.S. military presence.
I don't know if you know, but it came out today. CNN reported this very early in the morning. Specifically, this news was released at exactly 6:30 a.m., stating that according to various CNN sources and some internal information or leaks, they expect something to happen in about 10 or 15 days from now. It's a bluff, and possibly they're preparing for this weekend, maybe to attack.
That is amazing.
What I'm telling you isn't official, it's simply the leaks that
these people have. Since yesterday, several media outlets have already been mentioning and reporting it. So I think the president, on the platform he uses for communication, mentioned that he might make an adjustment to the attack plan and move it up. Yes, definitely another source of tension, something else being added overall to the markets, to the economy. This situation now, when we look at the situation with Iran. So the ultimate bottom line here is let's carefully consider and add up all of these different points. And it really is a perfect formula for exactly what we're seeing right now. A pretty volatile market. Today it opened in A. And importantly, something that happened an hour before we started recording, the Supreme Court announces, or basically come to a conclusion. I think it was a 6-3 decision from what I read in Washington, that the tariffs and the way they are imposed are, let's call it illegal, they're not legal. Now this opens a new box, Pandora's box, right? What needs to be done? Maybe these tariffs need to be rolled back. There's talk about refunding the money that was collected.
Supposedly, that's one of the sections. According to what I was reading, they have collected $295 billion in tariffs, but there's one amount, $133 billion, that I can't collect now. This is primarily because it constitutes an international commercial emergency economic powers legislation that the President of the United States explicitly stated he could legally implement through his executive presidential authority. And that's where the conflict with the justices comes from. They consider it illegal. He supposedly shouldn't have done that. And that's where the decision comes from.
Question.
It's not all 295 billion. It's like I calculated doing some quick math, 133 billion that would have to be returned.
Let me ask you, does Scott Besson have a plan B? Well,
I'm going to tell you something. I mean, there's no doubt I don't know what impact this will have, right? I don't feel ready yet. I haven't done the research, what effect this would have, but there's no doubt that it's going to cause a huge disruption in the funding, the new issuances of treasuries going forward. That's additional revenue that now won't come in. They have to return it and they have to fund it.
Correct.
So I assume there will be a larger offering that will possibly pressure on the Fed so that it can't raise rates, or rather so that it can lower rates. On the contrary, they have to maintain a more or less steady policy, but yes, it does have an effect.
You could believe, as you rightly mentioned, the higher price given everything we've been discussing and talking about.
Plus,
something additional, correct? So if we go back, as you asked me, if we go back to what we analyzed at the beginning of the year, there was talk that several points could be found that would negatively and temporarily affect things for a period of time. In the financial markets, this can create connections. This could, it could very potentially result in what they call a short-term bear market, which would mean a significant 20% decline in what is known as the Standard & Poor's 500 index. As an index, it could happen, and several forecasters, several analysts saw it coming. Now, of course, Larry saw it as a good entry point, a buying opportunity, depending on how valuations and so on were at that moment, what was attractive and what wasn't. That could happen. I think that maybe the beginning of this period is near. It all depends on how things develop. In my opinion, all these matters. Thank you. The new president coming into the Federal Reserve has a job ahead of him. He's not coming in at an easy time. I think no one ever comes in at an easy time. He will definitely be faced with some incredibly difficult and complex decisions, and the members of the Reserve will have to unify their individual perspectives and strive diligently toward achieving a common good for everyone involved. So I understand that we can expect continued volatility in the markets, definitely. It's a matter of being proactive, staying on top of the portfolios.
What actions do you see being taken? Possibly the rebalancing that is done in the portfolios? How do you see the strategy proactively?
I think right now, look, Fede, it's protection mode. I would go into protection mode, protect what we've been accumulating, even though that's already been done, at least in managed accounts. But here we're also speaking to the public, including people who might manage their own accounts, etc. If we have accumulated gains over the long term and have been building up returns, I think it's time to start protecting those returns a little bit. It's always important to look for alternatives that might not be so correlated with this volatility. We always recommend it. There are ways to achieve this. We haven't gone into much detail, and we can topic for the next episode, Ferian, but also what's happening in the world of private investments, private equity, what they call private equity, private credit, private real estate. We're going to talk a little about that in the next episode. Right now, there's a lot of movement within that sector. Today, news came out about Bluon. Many of their peers are also being closely followed. They're also taking somewhat restrictive measures to protect their investors and their assets, to protect both, to protect their strategies. But yes, we're seeing that they're becoming a bit more with less liquidity, offering less liquidity, because they're seeing, I don't want to call it a run for the money, but also not too many redemption calls. And
that's a lot of
people asking for money.
Because of the value they have with their...
Part of it, correct?
There is absolutely no doubt about it. These are critical warning signs that definitely need to be taken into consideration, carefully examined with great seriousness and addressed. It is clear that something very specific is happening right now, so nothing.
There's no time for more, but we'll stay tuned. Continuing to monitor, our mission in this podcast is to bring you information and give you our perspective.
Consciousness?
Awareness. And today's episode was about that. In the next one, we'll go into a little more detail. Roots also come. It's very important to touch on that. So until the
next, my name is Ferdinand Ruano, and
I am Jose Crespi.
We are the hosts of the Financial Game Special Edition. Interesting, objective, and educational material.
Listen to us on the Financial Game Special Edition.